Welcome to our exciting video on tax strategies. Nobody likes paying taxes, but with the proper knowledge and planning, you can significantly reduce the amount you owe and maximize your deductions. We understand that taxes can be overwhelming, so we're here to guide you through the process. In this video, we'll discuss two critical tax planning elements: tax-advantaged retirement accounts and tax credits. These powerful tools can help you save significant money on your taxes. We'll explore different types of retirement accounts, including 401ks, IRAs, and Roth IRAs, and how each can help you save money on your taxes. We'll also discuss deductions and credits you may be eligible for, such as charitable donations, home office deductions, and the Earned Income Tax Credit. These deductions and credits can help you reduce your taxable income, directly reducing the amount of taxes you owe. By the end of this video, you'll be equipped with valuable information that can help you make informed decisions about your taxes. So, get ready to take control of your financial future and start saving money on your taxes today. 1. Understanding tax-advantaged retirement accounts. The first step to minimizing your taxes is to understand tax-advantaged retirement accounts. These are accounts that offer tax benefits to help you save for retirement. There are several tax-advantaged retirement accounts, including 401ks, IRAs, and Roth IRAs. 1.1401k plans. Let's start with 401k plans. A 401k is a type of retirement savings plan offered by many employers. The money you contribute to a 401k is taken out of your paycheck before taxes are withheld, so you don't have to pay income tax on that money until you withdraw it in retirement. Additionally, many employers offer matching contributions, which means they will contribute a certain amount of money to your 401k based on how much you contribute. This is essentially free money, so it is essential if your employer offers it. 1.2 Traditional IRA. Another type of tax-advantaged retirement account is a traditional IRA. With a traditional IRA, you contribute money on a pre-tax basis, which means you can deduct your contribution amount from your taxable income. This reduces your taxable income and can lower the amount of taxes you owe. 1.3 Roth IRA. Finally, there is the Roth IRA. With a Roth IRA, you contribute money on an after-tax basis, which means you don't get a tax deduction for your contributions. However, the money in your Roth IRA grows tax-free, and you won't have to pay taxes on the funds when you withdraw it in retirement. This can be a great option if you expect to be in a higher tax bracket in retirement than you are now. 2. Maximize your deductions. The next step to minimizing your taxes is to maximize your deductions. Deductions are expenses that can be subtracted from your taxable income, which can lower the amount of taxes you owe. Here are some standard deductions you can take advantage of. 2.1 Charitable donations. Charitable donations are a great way to lower your taxable income while supporting a good cause. If you donate to a qualified charity, you can deduct your donation amount from your taxable income. 2.2 Home office deduction. If you work from home, you can take a home office deduction. This deduction allows you to deduct a portion of your home expenses, such as rent or mortgage interest, property taxes, and utilities, based on the percentage of your home used as your office. 2.3 Medical expenses. If you have high medical expenses, you may be able to deduct them from your taxable income. However, you can only deduct medical expenses that exceed 7.5% of your adjusted gross income. 3. Tax credits. In addition to deductions, tax credits can help you save money on your taxes. Tax credits are even more valuable than deductions because they directly reduce the amount of taxes you owe. Here are some tax credits you may be eligible for. 3.1 Earned Income Tax Credit. The Earned Income Tax Credit, EITC, is a tax credit for low-income workers. The amount of the credit depends on your income, filing status, and the number of children you have. The EITC can be worth up to $6,660 in 2021. 3.2 Child Tax Credit. The Child Tax Credit is a tax credit for families with dependent children. The distinction is worth up to $2,000 per child and is partially refundable, which means you can get a refund even if you don't owe any taxes. 3.3 American Opportunity Tax Credit. The American Opportunity Tax Credit, AOTC, is a tax credit for college expenses. The credit is worth up to $2,500 per year for each eligible student and can be claimed for up to 4 years of college. 3.4 Lifetime Learning Credit. The Lifetime Learning Credit is another tax credit for college expenses. This credit is worth up to $2,000 per tax return and can be claimed for any level of education beyond high school. 4. Tips for maximizing your tax savings. Now that you understand tax-advantaged retirement accounts, deductions, and tax credits, here are some tips for maximizing your tax savings. 4.1 Don't wait until the last minute. One of the biggest mistakes people make when it comes to taxes is waiting until the last minute to start preparing. However, by planning ahead and taking advantage of tax-advantaged retirement accounts, deductions, and tax credits, you can save significant money on your taxes. 4.2 Hire a tax professional. If your tax situation is complicated, hiring a tax professional to help you may be worth hiring. A tax professional can help you identify deductions and tax credits you may be eligible for, and they can also help you plan for the future. 4.3 Keep good records. To maximize your deductions, keeping good records of your expenses is essential. This can include receipts, bank statements, and credit card statements. By keeping good records, you can ensure you don't miss any deductions you're entitled to. In conclusion, taxes can be complicated, but with the proper knowledge and strategies, you can minimize the amount you owe and maximize your deductions. In addition, by understanding tax-advantaged retirement accounts, maximizing your assumptions, and taking advantage of tax credits, you can save significant money on your taxes. So start planning now and take advantage of all the tax-saving strategies available.